Dollar will be under attack. The financial system will be under attack. Um, and people want to transfer money out of dollars and are actually doing it now already. We see it. We're seeing Americans, there's been a lot of reports about, especially the big banks in America, looking after wealthy families and individuals, that they're transferring a lot of money into Switzerland and also into gold, of course.
Where would our next resistance going to be? So going back to February of 2024, and we do a parallel to the previous all-time high right here. And that gives us an upside basis for thinking that gold maybe could get up to around that 3750 to 3800 level. Silver is inching up. It's really underperformed gold since the break up here. Gold obviously going up pretty much every day versus silver consolidating. But this is still bullish on silver. And you can see the consolidation. So you're essentially looking for a breakout above 4150. And then I still think it has a small stopping point at 44, but really you could be looking at 48 to 50 on silver in the not too distant future.
The dollar is under attack. America's financial system is cracking. Wealthy families and big banks are already moving billions out of the U.S. banking system into Switzerland and into gold. Why? Because confidence in the dollar as the world's reserve currency is collapsing. In this urgent interview, Egon von Greyerz, a global authority on wealth preservation, and Gareth Soloway, a master technical trader, reveal what every small gold and silver investor needs to know right now. They warn that fiat currencies are in their final stages, and only gold and silver can provide lasting protection. Stay with us, because we'll break down their shocking predictions for gold surging toward $3,800, silver's breakout toward $50, and the looming risks that could shatter the U.S. banking system.
The dollar-based system and the reserve currency collapses. The financial system in the U.S. collapses. The banking system collapses. Whatever desperate action they take with, like with the whole Trump family now going into Bitcoin or cryptocurrencies and believe that that's going to be, the savior of everything. That's not going to happen. In my view, cryptocurrencies are a bubble too, highly leveraged. And therefore, that third risk, I think that's a major risk that it's actually led by the financial system collapsing in the West. The dollar will be under attack. The financial system will be under attack. People want to transfer money out of dollars and are actually doing it now already. We see it. We're seeing Americans, there's been a lot of reports about, especially the big banks in America, looking after wealthy families and individuals, that they're transferring a lot of money into Switzerland and also into gold, of course. So, there are not many places to flee to, are there?
No.
I think Dubai is obviously fantastic now, but it is next to the Strait of Hormuz. It can't be nearer than it is. It's so near. There has always, throughout history and even throughout my lifetime, been major conflicts in the Middle East, and of course, then Dubai will be exposed also. My point of view there's only one asset that has survived throughout history and maintained its value, and that's nature's money.
Sure.
And all other currencies, as we know, have gone to zero. So it's so easy if you want to protect your assets, your old nature's money, and you know that at least, as it has been the case for thousands of years, you maintain your purchasing power. You might not always make a lot of money, but in now when we have entered an era,
your wealth,
yeah, exactly. But now when we've entered an era where governments are accelerating the money printing, and because their deficits is also accelerating. Now it's such an easy decision. I think this is the easiest investment decision I've made in my life. So, we recommended up to 50% in gold 25 years ago. And now I would recommend, 100%, or of that, we recommend maybe 25, 30% in silver. I mean, it's obviously putting all your eggs in one basket, but it's like Rockefeller said, you put all your eggs in one basket and look after the basket. Because I see now, I mean, this is going to accelerate. The currencies have gone down by 99% in real terms, in gold terms, since 71. It's just 1% to go. But that 1% is 100% from now. And that we are going to experience in the next few years, in my view. How fast it goes, it doesn't matter, really. Protection is more important than, as I said, forecasting the timing. And I see you talking about cycles of markets going up for a while and then going down. Yes, you're obviously into shorter cycles. I don't really, in my world, we don't worry about that. We worry about protecting the risk that you have today, and there are so many black swans hanging above us. And U.S. banking system, for example. They'll all be there. The dollar, the euro, the pound, etc. I mean, as we said, they're already 99% on the way. So it's not far to go. It serves no purpose to measure the gold price in collapsing currencies because it's meaningless. You might as well measure it in chickens or cows or something more useful. Because gold and silver should only be measured by weight, really. How many kilos or how many ounces do you own? That's the only thing that counts. You know that you will maintain purchasing power, and if it will be $1 billion for an ounce of gold in a few years' time, or 1 million or whatever, it's totally irrelevant because what's the value of the dollar at the time? And that's why, as I said, I gave up forecasting the gold price many years ago because it is a mug's game, and to forecast it in something that is sinking by the day serves no purpose. And what I see the U.S. banking system. It's not going to survive in its present form, and nor is the European one, of course. So keeping money in the bank, I wouldn't recommend anyone to hold any money except for short-term spending money. If you have gold or silver, it's total liquidity. You can sell a gram, an ounce, whenever you want, and there's always a price for it. There's always a price. So therefore, being in the banking system, in my view, is a major risk. And yes, you talk about capital controls in Europe, but don't you see? I see clearly that the same is going to happen in the US.
I agree completely.
Yeah. So where do people go? That's what they ask, of course. They don't want to be in the EU, no. Switzerland always has been a better and a stronger economy than the rest of Europe. Now, of course, Switzerland is under pressure from the EU to come into the EU net and comply with more of the laws and the rules of the EU. But Switzerland is withstanding it, and of course, as Switzerland sees the EU collapsing, when I believe that the Switzerland will definitely stay outside of the EU network, and anyone can drop at any time, whether it's, as we said, social unrest, whether it's war, whether it's financial collapse of the financial system or the banking system, which, in my view, is absolutely inevitable. It's going to happen. It's only a question of when. It cannot be saved. No one is going to repay any debt. They just create new funny money. And it's the same in US debt's never going to repay it. And when you have a financial system with the dollar as the reserve currency.
Gareth Soloway explains that gold has confirmed new highs and could run toward $3,750 to $3,800 in the coming months. Silver is lagging behind, but forming a powerful bull flag pattern. If it breaks above $41.50, it could quickly accelerate to $44 and even $48 to $50. Egon von Greyerz adds a long-term perspective. Fiat currencies have already lost 99% of their value in gold terms since 1971. The final 1% devaluation still lies ahead, and that means gold could soar exponentially while paper currencies sink. For him, it's not about making money, but preserving wealth. He goes further. Banks are unsafe, debt can never be repaid, and governments are trapped in endless money printing. Egon once recommended holding up to 50% of wealth in gold. Today, he argues for 100% in gold and 25 to 30% in silver, calling it the easiest investment decision of his lifetime. Meanwhile, technical signals confirm a fragile backdrop. The US dollar has broken long-term support and is now forming a bear flag. The 10-year Treasury yield is at critical levels, with a breakdown signaling deep economic weakness. Historically, when the Fed cuts rates, stocks fall because investors panic that the Fed is too late and recession is imminent. Together, these forces point to a massive revaluation of hard assets. Gold and silver aren't just trades anymore. They're warnings of systemic collapse.
Let's flip over to gold, guys. Gold has been in the news. Gold is all the rage, and gold is going higher again today. Incredible continued strength. And again, I've been maneuvering in my GDX. I moved out for a good gain on that trade from last week. I've started to inch in on the short side today as well. Although, again, it looks like, at least I'll check out GDX in 1 second, but I'm just really trading it shorter term as it gets more and more extended. But gold today, beautiful move here. Where is this ultimately going to head? Like, where would our next resistance going to be? And I would say use the same thing. Use your parallel channel, right? So what we do here, and let's break this out here. We're now above that all-time high. We take our lows going right through here, okay? So going back to February of 2024, and we do a parallel to the previous all-time high right here. And that gives us an upside basis for thinking that gold maybe could get up to around that 3,750 to 3,800 level on this run. And again, gold continues to really defy, right? Once it confirmed above the previous high, close and confirmation, you got that real quick retrace, kind of pseudo retrace to the scene of the crime, and then it's moved up again. So really impressive move on gold here. If we go to GDX again, guys, is up a little bit. I shorted this morning and started to leg back in just below 67. It's just a starter position, so I'll be adding here shortly. But again, I'll keep you guys posted, and I'll even show you my snapshot in tomorrow's game plan if I'm still in the position. And again, I'll keep you guys posted on that. But again, overall, the miners are gapping up. Let's see what happens. We continue to put in these little dojis, which can be distribution signals, but the miners continue to stay very, very strong. Silver is inching up. It's really underperformed gold since the break up here. Gold obviously going up pretty much every day versus silver consolidating, but this is still bullish on silver. This pattern is actually looking more and more like what we would refer to in technical analysis as a bull flag here. And so again, you can see the consolidation. So you're essentially looking for a breakout above 41.50. And then I still think it has a small stopping point at 44, but really you could be looking at 48 to 50 on silver in the not too distant future. The dollar, let's touch base on the dollar. The dollar continues to move a little bit lower. It's still holding the longer trend going back to 2008. And I highlighted this on Friday because this is an epic chart. This is the financial crisis, right? The beginning of the financial crisis right back here in early 08. And this began the financial crisis where the Federal Reserve in the US basically dominated the global sphere of central banking and the US economy, right? And what's concerning to me is that not only have you broken this zone on the US dollar, right? All right. But also it's now forming a bear flag. And if this level breaks around 96.50 on the dollar and confirms, you have a major breakdown on the US dollar. And yes, would this be good for gold? Sure, it would. Now, listen, it doesn't mean gold can't pull back, but in the general scheme of the next 6, 12, 18 months, I'm sure gold will go higher. Bitcoin probably generally too, although corrections can be pretty insane on Bitcoin. But if the dollar starts to break this trend line, that spells trouble for the U.S. overall. It probably means the U.S. The economy is suffering. The 10-year yield, here we are, folks. We are right back to that same trend line here. We're reattacking it today after hitting it and getting a small bounce on Friday. The 10-year yield right now should hold this line. If it doesn't, watch out below. The 10-year yield could be headed down below 4%. My next big support line on the 10-year yield would be right in this zone here. Let me just draw this in and put it in. It's basically a zone of 3.92 to 3.82. Notice the pivot area right over here and this pivot low. That would be your zone where if this, let's say 4.05 breaks, that would be your next target on the 10-year. So listen, the yields are going lower. The dollar is breaking down. These are all things that, again, historically have been negative signs for the U.S. economy. But up until now, the market has loved lower rates, right? Because lower rates mean cheaper money. The problem is when it's associated with a weakening economy or dramatically weakening economy, that can be a negative. And by the way, that's one of the reasons why, if you look at past cycles, the stock market begins to fall when the Federal Reserve cuts rates, because anytime the Fed starts cutting rates, what is the market? The Fed is cutting rates because the economy is getting weak. Investors, because of emotion, they start to fret that the Fed has gotten behind the curve. They've gotten behind and they need to cut faster. And that's why you actually see when the Fed starts cutting rates, the market actually declines, is because the economy or the investing public begins to say, oh my goodness, the Fed's late. We're going to have this horrible recession. This is the emotion, which is a key component of trading and investing using technical analysis. So again, I just want to explain why that generally happens.
The message is clear. Protection matters more than prediction. Timing exact price targets is uncertain, but the direction is not. Gold and silver remain the only true stores of value in an age where fiat money is in freefall. Egon reminds us, measuring gold in collapsing currencies is meaningless. What counts is weight, how many ounces you own. Gold and silver are liquid anywhere in the world, anytime, in any crisis. The collapse of the dollar-based system is not a question of if, but when. Wealthy families are already moving into safe havens. For everyday investors, the window to prepare is rapidly closing. So, what do you think? Will gold hit $3,800 and silver reach $50 in this cycle? Or are we heading into an even bigger monetary reset? Share your thoughts in the comments below. And if you found this analysis valuable, make sure to like this video, subscribe, and turn on notifications so you never miss an update.